She handed me a check. "Thanks for the help. We're done." I replied, "Understood." Then I showed the investors I secured how she fired me. Now her company's funding is frozen and she's frantically calling me, begging. I, 32M, thought I had found the perfect business partner when she approached me 6 months ago. Fresh out of my corporate consulting job, I was eager to dive into the startup world with my expertise in securing venture capital funding. She had the tech vision, the prototype, and what seemed like genuine enthusiasm for building something revolutionary together. The first few weeks were incredible. I threw myself into the work completely, leveraging every contact I had built over 8 years in the industry. My network was extensive: former colleagues who had moved into investment firms, entrepreneurs who had successfully raised multiple rounds, and angel investors who trusted my judgment. I worked 18-hour days, crafting pitch decks, refining financial projections, and setting up meeting after meeting. Within 2 months, I had arranged presentations with 3 major venture capital firms. The investors were impressed not just with the technology, but with the comprehensive market analysis and growth strategy one had developed. One firm expressed serious interest immediately, asking for additional documentation and a follow-up presentation. Another requested a detailed technical review. The third wanted to discuss terms for a potential seed round. I felt proud of what we were accomplishing together. She seemed grateful for my efforts, often commenting on how impressed the investors were with my presentations and how professional everything looked. I assumed we were building towards something significant, something that would benefit both of us long-term. The momentum kept building. I secured meetings with 2 additional firms, both of whom had excellent reputations for supporting early-stage companies. My former manager at the consulting firm introduced me to a partner at one of the most prestigious investment groups in the city. Everything was falling into place perfectly. Then came the meeting that changed everything. 3 months into our partnership, she asked to speak with me privately after we had just finished a particularly successful presentation. The investors had been enthusiastic, asking detailed questions about scalability and market penetration. I was already mentally preparing for the next steps in the due diligence process. She told me that she had been thinking about the direction of the company and felt it was time to make some changes. She explained that she wanted to bring in someone with a different skill set, someone who could focus more on the technical aspects of the business development. I was confused, pointing out that the investors had responded so positively to my approach and that we were closer than ever to securing funding. She listened patiently as I outlined all the progress we had made and the concrete next steps that were already in motion. The follow-up meetings were scheduled, the technical reviews were proceeding smoothly, and 2 firms had already begun preliminary discussions about valuation. I reminded her of the connections I had made and how much trust one had built with these investors over months of careful relationship building. Her response was polite but firm. She appreciated everything I had done, but she had decided to move in a different direction. She handed me an envelope containing a check and explained that this would cover compensation for my work up to that point. She told me that my services would no longer be needed and that she would be handling investor relations moving forward. I looked at the check. It was a reasonable amount for consulting work, but far less than what we had initially discussed regarding equity and long-term compensation. More importantly, it represented the end of what I thought was a genuine partnership. I had invested not just time and effort, but also my reputation and relationships. I told her I understood her decision and accepted the check without argument. There was no point in creating drama or trying to change her mind. Her body language and tone made it clear that this was not a negotiation. I gathered my materials, wished her luck with the company, and left her office. Over the next few days, I reflected on what had happened. The more I thought about it, the more I realized how strategically she had handled the situation. She had waited until I had done the hard work of building relationships and generating serious interest from investors. Now she could leverage those connections and the momentum I had created without having to share equity or decision-making authority. I began receiving calls from the investors I had been working with. They wanted updates on the next steps and were asking about scheduling follow-up meetings. Each conversation was awkward as I explained that I was no longer involved with the company. They seemed surprised and confused, since I had been their primary point of contact throughout the entire process. The investors started asking more detailed questions about the change in representation. They wanted to understand why someone who had been so central to the process was suddenly out of the picture. I was honest about the situation, explaining that the founder had decided to move forward without my involvement. Their responses were telling. Several mentioned that they had been specifically impressed with my market analysis and strategic thinking. One partner explicitly stated that my involvement had been a significant factor in their interest in the company. Another expressed concern about the sudden change in team composition, especially so close to potential funding decisions. Word travels fast in the investment community. Within a week, I started hearing from other contacts who had learned about the situation. Former colleagues reached out to understand what had happened. Some offered support and expressed surprise at how I had been treated. Others shared similar stories of founders who had leveraged consultants and then discarded them once the groundwork was laid. 2 weeks after our meeting, my phone started ringing with calls from her. The first few times, I let them go to voicemail. She left messages asking if we could talk, saying she wanted to discuss some opportunities for collaboration. I deleted the messages without responding. The calls became more frequent. She began leaving longer messages, explaining that some complications had arisen with the investor meetings and asking if I might be available to provide some guidance. Her tone was different now, less confident, more urgent. I still did not respond. A month later, I learned from a contact at one of the venture capital firms what had been happening. Without my involvement, the follow-up meetings had not gone well. She had struggled to answer detailed questions about market positioning and scalability. The investors had noticed the absence of the comprehensive analysis and strategic thinking that had impressed them in the initial presentations. More importantly, several investors had directly asked about my departure from the company. When she could not provide a satisfactory explanation for why someone so central to the process was suddenly gone, it raised red flags about her judgment and management capabilities. One firm had explicitly stated that they were uncomfortable moving forward given the circumstances. The technical reviews had also stalled. Without someone managing the investor relations process effectively, communication had become inconsistent and unprofessional. Follow-up materials were incomplete or delayed. The momentum we had built over months was disappearing rapidly. Her calls to me increased in frequency and desperation. The voicemails became longer and more detailed, with her explaining specific challenges she was facing and asking for my advice. She mentioned that investors were asking difficult questions she was struggling to answer. She offered to discuss new compensation arrangements if I would consider returning to help salvage the relationships. I began returning calls from the investors who reached out to me directly. They wanted honest assessments of the company and the founder's capabilities. I was professional and factual in my responses, but I did not hide my concerns about how the situation had been handled. I explained that I had been dismissed despite the progress we had made together and that I had questions about the founder's commitment to building a strong team. The investors appreciated my candor. Several mentioned that my departure had influenced their evaluation of the investment opportunity. They valued stability and strong leadership in early-stage companies, and the sudden change in team composition had been a significant concern. One partner told me directly that they had decided to pass on the investment primarily because of questions about the founder's judgment and management approach. 3 months after she had handed me that check, the funding landscape for her company had completely changed. The firms that had shown strong initial interest had all moved on to other opportunities. The technical reviews had been suspended. New investor meetings were difficult to secure because word had spread about the internal instability and management issues. Her calls to me became daily occurrences. She left messages explaining that she was willing to offer equity compensation and a formal partnership structure if I would return. She acknowledged that she had made mistakes in how she handled my departure and wanted to make things right. She mentioned specific investors who had asked about bringing me back into the process. I finally returned one of her calls. She was relieved to hear from me and immediately launched into an explanation of how much the company needed my expertise and network. She offered terms that were significantly better than our original agreement, including a larger equity stake and more decision-making authority. She admitted that she had underestimated how important my relationships and strategic thinking were to the company's success. I listened to her offer carefully. The terms were attractive, and part of me was tempted to return and salvage what we had built together. But I had learned too much about her character and decision-making process to trust her again. Someone who would dismiss a partner so callously after they had delivered results was not someone I wanted to build a long-term business relationship with. I told her I appreciated the offer, but had decided to focus on other opportunities. I explained that trust was essential in business partnerships and that her previous actions had damaged that trust beyond repair. I wished her luck with the company, but made it clear that I would not be returning. The conversation was difficult but necessary. She tried to persuade me by emphasizing how much money we could both make if the company succeeded with proper funding. She pointed out that the investors still respected my work and that my return would likely restore their confidence. She offered to put our new partnership terms in writing with legal protections to ensure I would not be dismissed again. But I had already moved forward. During the months since our separation, I had been building relationships with other entrepreneurs who valued collaboration and long-term thinking. I had started consulting with 2 other startups, both of which had founders who understood the importance of building strong, stable teams. The work was engaging and the partnerships felt genuine. I also realized that her situation had become a valuable case study for other investors and entrepreneurs in my network. My experience demonstrated the importance of due diligence not just on market opportunities, but on founding teams and management capabilities. Several contacts mentioned that they had become more careful about evaluating leadership stability when considering investments. Update 1. 6 months after our original separation, I learned that her company had officially suspended its fundraising efforts. The last of the interested investors had withdrawn from consideration after she was unable to provide satisfactory answers about the company's strategic direction and leadership structure. The technical team had also begun to fragment, with key developers expressing concerns about the company's stability and future prospects. Her calls to me had stopped after our final conversation, but I began hearing from other people in our industry about her attempts to restart the fundraising process. She had hired a consulting firm to help rebuild investor relationships, but they were struggling to overcome the reputation issues that had developed. The investment community is smaller than most people realize, and word about management problems travels quickly. Meanwhile, one of the companies I had begun working with successfully closed a series of funding round. My role in that success led to additional consulting opportunities and a growing reputation as someone who could effectively bridge the gap between entrepreneurs and investors. The contrast with my previous experience was striking. Working with founders who valued collaboration produced better results for everyone involved. Update 2. A year later, I encountered her at an industry conference. She approached me during a networking break and asked if we could speak privately. Her demeanor was different, more humble and reflective than I remembered. She told me that the company had ultimately failed to secure funding and that she had been forced to shut down operations 6 months earlier. She acknowledged that dismissing me had been a critical mistake that had cost both of us a significant opportunity. She had learned hard lessons about the importance of building and maintaining strong partnerships, especially when those partnerships were producing results. She asked if there might be opportunities for us to work together on future projects. I appreciated her honesty and willingness to acknowledge her mistakes. Personal growth and learning from failure are important qualities in any entrepreneur. However, I also knew that trust, once broken in business, is extremely difficult to rebuild. I told her I was focused on my current projects, but wished her success in her future endeavors. The conversation was cordial and professional, but it reinforced my decision to move forward rather than revisit the past. Sometimes the most valuable lesson from a difficult experience is learning to recognize and avoid similar situations in the future. The success I had found working with collaborative, trustworthy partners confirmed that I had made the right choice. Looking back, that check she handed me represented more than just compensation for services rendered. It was a defining moment that taught me about the importance of choosing business partners carefully and maintaining professional standards even when others do not. The temporary setback led to better opportunities and stronger relationships that continue to benefit my career today.